warm welcome to this very special interview on the Money Mile. Joining me today is one of India's most dynamic mutual fund leaders, Swarup Mohanty, who's the CEO at Mirae Asset Investment Managers, one of India's fastest growing mutual fund houses. Thanks very much, Swarup, for joining me here today. It's always a pleasure talking to you. Swarup, when it comes to equities, we talk of a 3 to 5 year kind of a time frame. But given what we've seen, we see more statements coming out now from experts and advisors that 3 to 5 years probably may not be enough. You need to have a far more longer term horizon when it comes to investing in an equity mutual fund. What, according to you, is the right time frame for investing in equities?
Fundamentally, before getting into equities, they should ask themselves why they're investing. I think that sort of brings up the first question of fixing up a reason for investing, that is a goal. And according to their goal, they have to then find out whether they're conducive to investing in equity, or does their plan actually require equity investing or not. And then if it does fall into that plan, this has to be fairly long term. I would start that from a 5 year sort of horizon, and that's something which I've always believed in. And that 5 year horizon would be for the large cap and the multi cap category. As we go down the risk or we go up the risk ladder, the years would change. I would not recommend a mid cap fund for anywhere less than 7 to 10 years. And then the smaller caps would be for longer than that. And when you say that, you know, it's no longer gone are those days when you buy a fund and sort of hold it. A periodic review is becoming very important to everybody's portfolio. And you know, you have to watch every fund you have invested in, and then if it matches with your goals and you're on the path, well and good. But a review would throw up whether you're on the track or not. And if there are any changes that are required to be made, along with the advisor's sort of consultation, those can also be made. But equity funds not less than 5 years is what I feel, and it should match with the risk profile of the investor. Let's face it, I mean, when you see a crisis like COVID, it is a natural riskometer for all of us. Sometimes, you know, we write that the mutual funds are subject to market risk, but when something like this unfolds, we actually know the depth of the risk. And then some investors would be going through that as we speak. For me personally, the year 2000 was a huge riskometer. I went through the fact that, what can I say, the sector funds were too far ahead or away from my risk capability. And from then on, I have not invested. So these are times when you really realize the kind of risk that one can take, and then align them to the underlying fund. There is a fund for you, definitely, but aligning that is more critical than anything else.
Thanks very much, Swarup, for joining me for this interview, and hopefully things will get better soon. Thank you once again for joining me.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.